Alright, so this video is going to cover this piece of the trend from this low to this high. Alright, so this low right here and this high. So what's going on? Well, the price from here accelerates down, meaning accelerates down right here. You can see that the big thrust, large range, etc., etc., and the big volume. So there's your climax. The bar after that, the thrust shortens a little bit. There's lack of progress in the closes, definitely less than the prior bar before it, and there's an increase in volume. So you have to ask yourself, why is the distance, why is there shortening of the thrust, lack of progress in the closes, but increasing volume relative to the prior bar before it, which has less volume but is able to do much more damage on the way down? The bar after that doesn't really do that much. It's because they're encountering resistance. By resistance I really mean like support, like buyers. The buyers are buying there. That's what's going on. Alright, so I don't mean like resistance at a high or whatever. Just seeing that all this pressure but not a lot of progress, all this effort, not a lot of reward, etc., etc. It's because there are buyers there. They're accumulating. One side is selling, the other side is buying. Smart money coming in as price gets oversold as a result of the accelerated move down. And then after that, you have this bang job right over here. It goes straight up on a good amount of volume. That's probably the biggest green volume in the multiple bars. So high volume on the way down, which is basically buying on the way down and buying on the way up with follow through. Goes up to this area right up here. So you have this bar here, then you have this bar here, then you have this bar here. What's notable are the higher highs and higher lows. Yeah, the last bar didn't close, it was a mid to low end close, but all three bars are making higher highs and higher lows. One of the things you want to be careful about is when you have a lot of volume and it reverses like that, like over here, is whether it's short covering or not. So how do you tell if it's short covering or it's not? It's a little bit harder because especially when prices accelerate down, that's when the market is oversold. When it accelerates with speed down relative to prior behavior, market is oversold. So at that time, short covering can really create a nasty rally. In this case, there's multiple bars up, bang, bang, bang. So there's a lot of buying. Yeah, there could be shorts that are covering. And yeah, there could be longs that are buying. And yeah, there could be both. After that, you want to watch what happens. And as price goes down, look at the shrinkage in volume. Extremely low. What does that mean? There's no pressure. That's what it means. There's no pressure. There's no supply pressure. After that, it rallies up on increasing volume, increasing range, increasing whatever, and with a high-end close, bullish. And it follows up. Now on the subsequent bars, the volume is not increasing. It's decreasing. It's tapering off. So what does that mean? That means there's lessening of demand pressure. Lessening of demand as it goes to this resistance area. As it goes to the resistance area, the volume is decreasing. So do you think it's going to break out? No. Yeah, anything can happen, but given this amount of data that you have to make a judgment on it. And as price is going up to this resistance area, it's sluggish and volume is tapering off. Lessening of demand as price is testing resistance. What happens after that? Right here is when you have right here the bar totally dries up in volume, and after that you have a red bar which has a slight increase in both price and volume, meaning price range from high to low of the bar and volume. And what does that mean? It means it's set up at resistance for reversal back down near support. So when it goes down, it's even less volume. So yeah, this was a lack of demand on the way up to resistance, but this is a lack of supply on the way down to the support level. It's even less. And when that happens, it encourages the bulls to try again. This time, when bulls see this type of behavior as it goes to support or tests the support area, around that support area, price accelerates with widespread increasing volume relative to the prior bar and basically breaks out. So this is the first long. Now he's not too crazy about the long because there's not enough preparation and all that. Fine. But this is a place to go long when it cracks above resistance with increasing on a breakout, if you're a breakout trader. And then it has follow through. And it does this. And when it does this, although this volume is high relative to the prior bar, it's like, I'd say about 60%. So that's still bullish, because although the volume is still high on this red bar, on this pullback bar, it is only 60% of the volume of the prior bar, setting up the rally. Here you have a problem. What's the problem? Accelerated volume and price. Now, do you know whether this is a climax? You don't. But one indicator that will tell you that there's something wrong is just to wait for the next bar, and it's a red bar with high volume. Why is it that you have a bar like this which looks bullish at the time because of this recent background, looks very bullish because of the low volume or less volume pullback and this thrust and that breakout and all that, right? Breakout, follow through, low volume pullback, breakout again, high volume. But understand the area that it's going into, right in this area. And when price accelerates like that with volume, you know, why doesn't it have follow through? That's the question. If there's so much volume and so much pressure and price is reacting by moving, then why is it that the bar right after it also has high volume and a low end close? This will be a red bar, and they're right at resistance area. So that's what you got to ask yourself. So it turned out that the following bar went up on less volume, and now we see that as price increases and goes into this resistance area, volume is diminishing, which means demand is diminishing. As demand takes price higher, it is lessening. And that gives rise to a potential reversal which occurs right here at the level of a prior resistance level. So now, does this mean you just take a short here? Obviously not. So you might say, oh, this is the climax, and this is just some lessening of demand, and this climax forecasts like the move, which is a reversal because it is an ending action and all that, but it doesn't happen right away. It does happen here. Does this mean you just go short? Obviously not. Why? Simple. Trend is up. That's it. Higher high, higher low, low, higher high. So over here it goes down, and you have this bar here that goes up. It's not increasing on any additional volume. It's probably bouncing off of this red bar, which someone probably sold. So when it tests that, they try to get out. That helps with the case for the green bar. So it goes down. And this is where it gets really interesting. I'm going to go over this tomorrow, but the idea here must be understood. Why I say it must be understood is because on the bullish side, I've already gone over the springboard, which is all the way back here. Right here, springboard and launch into markup. On the bearish side, Wyckoff mentions a springboard, and he mentions it right there. So this behavior needs to be understood in detail, and I'll go over it tomorrow. Why is it a springboard? What is the characteristics of the springboard? How is it set up? What to look for? All that shit. So what we know right now is you have a climax in the background. A potential climax in the background, you call it. And you have some more bars, a little shaking and dancing over here when there's a turning point. And there's a lessening of demand here as it rises. This he doesn't talk about, but in my view, this is a minor climax because it's sudden. As the volume is decreasing, look over here. I don't know what this is, 2 million or whatever. Let's just say this is 2 million, then it's tapering off to 1 million, and all of a sudden it bounces to 2. That is like a 33% increase from the prior bar, has no follow through, and goes right back down. So right there, this I'm sure is, if you see my prior videos, you understand what I'm talking about. If not, watch them. Over here, this is what I'm interested in this bar at this particular point, and then the crack. Now, why does he call this a springboard? What are the factors? What are all that shit? So, is it because of other reasons? Would it be something like, it's right in the dead center? By dead center, I mean an apex. So, can you just like draw two lines converging, price bars, making a triangle? Is that a springboard? No. Because you could draw a triangle all over the place. So you can draw it right here from this low and this high and say, oh, that's an apex or triangle. You can draw it right here, here, right? All this shit could be a triangle. Draw from this low to this high. So I mean, those that the idea that every apex is some type of springboard, or just when you see a chart, just draw two lines converging. What happens is you start seeing stuff like these patterns all over the place. Whichever pattern you'll see. You see head and shoulder, forget it. I can draw head and shoulder after head and shoulder, and modified head and shoulders with two shoulders and all that shit. So the question is, what makes this the springboard? What are the price and the volume characteristics that make this a springboard, a bearish springboard? So I'll be examining this tomorrow and then probably go in the rest of the downtrend. Thank you. Bye.